Hello everyone and welcome to my channel once again. First of all, a very happy Ganesh Chaturthi to all of you all. Lord Ganesha, also known as Vignaharta, hope he takes away all the Vignas from the market and shows us the bullish trend once again. So if we see all those who have seen my video last week, I'm sure they must be enjoying because the entire week gone by we have seen those are the precise stocks which really made a new high even in this kind of markets. If we see HDFC AMC touched the record highs of 2500 levels, HDFC Life made a new high, Asian Paints made a new high of record 1621 levels. So I think even in this kind of markets, even the mid caps as we discussed, Shobha Limited, I think in a span of mere 3 days it managed to rally 10%, thereby beating the index level. So of course there are a whole lot of negative sentiments hovering the markets, and it shall further escalate because we have seen that the GDP data has come miserable at 5%, which is at 6 years low. But one thing, if we see, I'm little happy that we have come out with such bad numbers because that will be an eye opener for the government. Of course, we have seen that when in a span of 2 months where 18 lakh crore rupees have been vanished from the markets, we are seeing a lot of aggression from our FM in terms of quite a number of appearance in the press conferences and many historic decisions she has taken. First being merging of all the PSU banks. I think that's a commendable job. Why? Because if we see from after 73 years of independence, I don't think so prior to this any of the FM or government have even thought of doing this thing. So the fact that she has actually done this is worth applauding. Though not many PSU banks would be a good deal, but there are few good deals, good small PSU banks like the Syndicate Bank, Allahabad Bank, which are merging with good Canara Bank and Indian Bank. So if you see, even the acquirer is a strong hand, and getting acquired is also a strong hand. So I think this combination of Canara Bank with Syndicate Bank and Indian Bank with Allahabad Bank is a good deal because both the acquirer and the acquiree for quite couple of quarters has been reporting good set of numbers. Precisely Canara Bank, if you see, has turned black. It has turned profitable, and it has also got a recapitalization. And the fact that other small syndicate bank and for Indian Bank, Allahabad Bank merges into it, there will be synergies of geographies, and both Syndicate Bank and Canada Allahabad Bank also have good CASA ratio. Those banks in particular have also turned black, and losses have been declining, asset quality has been improving, provisions has been declining, which means that further there is no risk of increasing asset quality. So I think if I have to choose from a pack of all the PSU banks, my these two combos of Canara Bank, Syndicate Bank, Indian Bank and Allahabad Bank is a good deal, I would say. Now we are seeing automobile sales numbers, and there is just no respite for the automobile sector across the board, be it the commercial vehicles, tractor sales, passenger vehicles, two-wheelers, all of them are reporting dismal set of numbers. Eicher Motor, I think, have reported very bad set of numbers. Again, M&M from the tractor pack, Hero Motor also has not reported good set of numbers. But from the entire pack, if you see, I would again say that when other guys are degrowing by 20%, 24%, Bajaj Auto is also degrowing. There is no exceptional to it, but at a slower pace at 13%. So if anyone wants to play automobiles theme, I would only recommend Bajaj Auto from the automobile sector. and we have seen the government had also come out with some reforms or trying to boost the positive sentiments by way of uh, uh, increasing the depreciation rate, and government themselves buying the automobile companies. But I feel what is more positive for automobile is the fact that NBFCs are being liquidated. NBFCs are trying to come out from its liquidity crunch scenario, and that is why the cascading effect would be on the automobile sector. Hence, one can definitely take bet, and that is why I think Bajaj Auto is a good pick. I would certainly not go for Maruti, because of course Maruti's exports have not been good, and again passenger vehicle has its own set of competition from the Olas and Ubers of the world. And again they have said that they are going to stop their diesel car productions from December, which would again add fuel to fire and will not come out with good set of numbers. So I think Maruti should be a complete avoid, and only one pick should be Bajaj Auto from the entire auto pack. Now, if we see how do we want to strategize, in the week coming. In the next week, then I would say we have a very clear picture now. Why? Because we have just seen Q1 earnings getting wrapped up, and we have seen many companies even in this kind of a dismal environment where we are seeing GDP growing at mere 5%. Today again we have seen PMI data for manufacturing has not come good. It has come at 51% as against to previous month of 52%. But the good thing is it is well above 50%. So I think macros will take its own time to improve. We have the fresh problems from the US and China, both trying to levy tariffs on each other. Both are counter-attacking each other, and I think this kind of play will continue for a long time, at least till the next presidential election. So I would say we have our own set of indigenous companies, which are doing good, and in this kind of a whole scenario, there are companies who have grown at 50%, 100% on the bottom line, and I think it's a commendable job done by the management of these companies who could even survive and are now thriving, with such good set of numbers. So I think these companies will definitely augur a good buy, and that is why one should only look at these set of companies, and I think concentrated portfolio will work rather than diversifying into many stocks. So we have for the likes of KDI Industries, Shobha Limited, from the mid-cap space, even Metropolis. If we see, I think it's a diagnostic company worth just 5,000 crore of market cap, but the acquisitions that it has done is compounding at a very faster pace. And as Warren Buffett always says, you should always invest in those companies who are able to compound its acquisitions beautifully. And that's precisely why Metropolis is able to do good even in such tough times. And of course, with the kind of festive season we are now going to come up, I think diagnostic company is a must in a portfolio. And also looking at a changing lifestyle, that's why if we see from a pack of 3, I think two of them are making new highs, and I have been recommending Metropolis since it was at 960 levels. So again, I think Metropolis will augur even a good buy at current market price. So I think these are 3 mid-cap stocks one should focus on. And of course, from the large packs, apart from the ones of HDFCs and the Bajaj Group, I think one can definitely, of course, hide in these kind of groups. But then I think ICICI Bank is also a good buy, because if we compare both HDFC Bank and ICICI Bank Q1 earnings, both of them are growing at a good pace. ICICI Bank is also growing at 17%, annually at a loan book growth level. Its CASA is doing good. Asset quality is declining steeply, and if I have to think it correctly, if it continues to report such good set of Q2 numbers as well, then I think ICICI Bank will definitely go for a re-rating. Why? Because look at the valuation gap between ICICI and HDFC Bank, where we have HDFC Bank trading at 4 times price to book. We have ICICI Bank growing at an equal pace, trading at just half its valuation of just 2.5 times price to book on an FY20 basis. So I think there's a huge valuation gap between ICICI Bank and HDFC Bank, and that is why at current market price I would want to do my fresh buying into ICICI Bank rather than parking into an overvalued zone of HDFC Bank. Now, apart from ICICI Bank, I feel even Sun Pharma augurs a good buy at current market price, because the biggest negative that was hovering around, the insider trading thing, SEBI has given a clean chit to Sun Pharma, and from past 2 quarters, we are seeing that Sun Pharma has reported good earnings and is doing good at every level, be it at the top line, bottom line, margins increment. So I think margin of safety is also very high in Sun Pharma, and that is why one can definitely look at Sun Pharma, though it has started to rally, but I think there's a long way to go, and that is why from the entire pharma pack I would want to park my money into Sun Pharma. So I think these are 5 set of stocks that one can look at in this kind of macro environment where we have loads and loads of negative news. But these are the companies that survive better in the Q1 earnings, and we're quite confident that it will do good even in Q2, because the fact is the macros will not overnight improve. Though the sentiments will improve, I think the government will take all the right steps, and will definitely come out with more reforms as promised. And even RBI governor has said that they're going to have multiple rate cuts. So if you see all these sectors, like Shobha and Bajaj Auto and KEI will definitely do good even if the macro environment improves. So the macros and micros are all suitable for these set of companies, and that is why I would want to park my money in these set of companies. So that's it from my side in this video, and do tune in next Sunday for more updates. If you all liked watching this video, do share, like and subscribe to my channel. You can also follow me on Twitter, where I keep sharing timely updates. And thanks and bye.